Good morning, this is Bill Baruch with MF Global on Thursday, October 27th, here to talk about the metals. As everyone has seen through this week, gold has had a tremendous rally from last week's lows, about $125 from the lows last week to the highs this morning at $1731.5. A lot of that started Tuesday with a tremendous move that became called the safe haven trade and is back on. I believe this is true. A lot of worries across the globe with Europe, as well as here in the United States, and who holds this European debt, that the market has fluctuated to the gold as a safe haven trade. And initially, earlier this week, you saw a nice big move with the bonds as well that break back up upwards as a safe haven trade as well. Now, this morning, through last night, we have a resolution in the in the euro problem here. And this has caused the euro to rally big, the dollar to extend to new lows, and the S&P to run to its 200-day moving average at 1271. Now the gold, however, is still holding very strong. This market is roughly around the 1720 range, only $11 from its highs. I think you're seeing this the market in gold is agreeing that although a resolution is found, the details need to be dissected. Even if this is help to the problem now, further problems are still present. How and where and why, what are we going to do going forward here? And so the gold, I have a long-term target, intermediate-term target, let's say, over the next couple of weeks, 1785. This is a level, a tipping point. End of September 22nd, I believe. And then it also is a range retracement. We're flipping that range over, going to about 1785, the range we've seen through most of October. I think gold is going to grind its way up through there. It may be a slow grind if the people and the hopes believe that the Eurozone problem is over. I don't think this is over. I think there's a lot of details that need to be dissected. And this could help gold get to 1785 a lot quicker. Silver is acting a little more contained this morning, finding resistance 3408.5, I believe, so far this morning, and it's trading just below 34. I think that if gold continues to go higher, as well as the outside markets can start getting silver going their way with the industrial use there is resistance at 34.25, a retracement range, as well as its 200-day moving average at 36.25. So I think that market can go a little bit higher here over the next week or two. And in a little bit of a shorter-term trade, while the good feeling is about with the Europe debt deal, that copper is a market leader, and I think a great buy here on any little pullbacks from the highs of the last 2 days. We are higher and quite a little bit of a leader this morning with GDP in line, not better than expected. And really, what does that mean? But so far, copper is acting well, and I think you can buy any dips to look for about 3.8. And as well, I believe platinum is going to catch up to gold. I think its industrial use with a lot of this this resolution as well is going to help, and the euro rallying and the weaker dollar is going to help platinum, copper, silver, and then I think gold will slowly move higher with that as well. If you want to talk about any of these markets in a little more detail, how to play them, and what strategies to use to capture this short-term or long-term, please give me a call at 1-866-790-4371. Remember, as always, futures trading involves substantial risk of loss and is not suitable for everybody. Thanks.